My portfolio in the month of May was like riding Thunder Mountain at Disneyland. First it went up, then it went down, then it went up, then it went back down, and then it climbed once again to a now all-time high. And in this month's portfolio update, we're gonna talk all about it. So without further ado, let's get into it. All right, what is going on, my friends? Ryan Williams here, back with another one. In case you're new to the channel, welcome aboard. Here we talk about how to create passive income and reach financial freedom by investing in dividend stocks, which is hands down the easiest way to create passive income. Really, anyone can do it. And just in the last 2.5 years, I've been able to grow my portfolio from about $100 in annual dividend income to now over $1,600 just coming in on autopilot. If I can do this stuff, you most certainly can as well. And I'm very excited to show you more inside my portfolio today. So let's just get right into it and jump over to the screen. All right, guys, so as you can see here, my portfolio is currently valued at just over $37,600, which is a big jump from this time last month. When we did the portfolio update for the month of May, my portfolio was sitting at about $36,400. So we've jumped up about, $1,200 in the last 30 days. And some of this is coming from my own contributions, but really more so it's from the jump in unrealized gains. So last month, this portfolio's total gain was 5.8%. Today, guys, it's 9.15%. So we've jumped up, what is that? Almost 3.4%. And I've seen a pretty big jump in annual dividend income as well. So right now we're at just under $1,650 compared to this time last month. We were sitting at $1,587. But honestly, guys, I don't know how accurate this number on the screen is. If we cross-reference this with my reading from the Charles Schwab app, that has me at $1,626 in annual dividend income. So really, we're probably between, $1,635, $1,640 in annual dividend income, which is really still not too bad. Overall, the month of May was really good for me on the stock market, surprisingly, because it was such a swingy month. A lot of ups, a lot of downs, but overall, we ended up quite a bit up. Now, moving on, guys, let's jump over to Seeking Alpha. I want to show you my best and worst performing stocks for the month. So this is my entire portfolio here on Seeking Alpha, which, by the way, guys, Seeking Alpha is my favorite investing platform. I do pretty much all of my stock research here on Seeking Alpha. I use it to track my portfolio pretty heavily as well. And if you guys have ever thought about signing up for the premium version of this website, because I know a lot of you guys out there use it as well, I have a link in the description that will get you $40 off the premium version, which if you break that down on a monthly basis, that comes out to only about $16.50 per month. So really not too bad. There's a lot of great stuff in the premium version. It's been a huge help for me. But getting back to my portfolio, guys, in the last month, my best performing stock was Chevron right here, which was up nearly 13% just in the last 30 days. This stock has really been on a roll. Surprisingly, AT&T here is in second place with another double-digit gain in the last month. We have EPD up quite a bit, Verizon up a little bit, Southern Company, 3M, and we have, as you can see as we scroll down, a lot more losers. Let's actually do this. So we're going to put the biggest losers at the top. And also surprisingly, Procter & Gamble has been my biggest loser in the last 30 days. Main Street Capital and ORCC, two of my BDC's business development companies, also had quite a big drop. XYLD, Realty Income, AWR, look at all of that red, guys. Look at all of that red. Having seen all of this, it's actually surprising that we were up so much overall in the last month. And going over here overall, showing you my best and worst performer, Chevron, no surprise, once again, is my best performing stock right now, currently up about 91.5%, which is the highest I've ever seen it. AbbVie is in second place, up nearly 30%. Lockheed Martin's up nearly 30%. Altria Group, Southern Company, Coca-Cola. I have a lot of stocks that are above, a 20% gain, which is really nice. And then scrolling down to the bottom, I have some that are not doing well, but also not doing terrible. I mean, Starbucks is down 17%, which is why I've been buying it every single week, lowering my average cost per share. Intel's down 14%, XYLD, 3M, Verizon, JEPI, all of these other stocks are down in my portfolio right now. And as you guys know, I've been contributing a lot to some of these positions, namely Lowe's and Starbucks, which brings us to the next segment in the video. I want to show you guys all of my purchases for the month of May. So as you can see on the screen, starting with Lowe's, I invested $300 into Lowe's and got 1.3 shares of that bad boy. That's the newest position in my portfolio, so I'm really trying to build that up. I invested $52, just threw a little bit of money into ORCC and picked up 4 shares of that. I invested another $250 into Starbucks, which, like I said, I've been buying every single week. And throughout the month of May, I was able to pick up nearly 3.5 shares and just crossed the 30 share mark with my Starbucks position, so that's pretty sweet. I also invested a little bit of money into Verizon, threw $50 into it and got just over 1 share. And last but not least, I invested $200 into my Roth IRA, which is spread out across 5 different ETFs, and I hold that in M1 Finance. All in all, though, this brings my total purchases for the month of May to $852.32. All right, now jumping back over to Seeking Alpha, getting into my watch list, guys, I made some pretty substantial changes in the last month to the stocks that I'm considering adding to my portfolio. I added some new positions in here, I removed some, and let's start with the ones I removed, actually. Believe it or not, I removed Microsoft from my watch list, which I'll touch on in just a moment. Okay, I removed SRCE, First Source, which is a regional bank somewhere in the Midwest. I also got rid of Scott's Miracle-Gro SMG, which is a stock I really wanted to like. I really wanted to like this company more, but the financials just weren't there for me. And I know the CEO just sold a bunch of his shares, and then that was kind of a red flag for me as well. So I'm going to remove that from the watch list for the time being until maybe, things change in the future for Scott's Miracle-Gro. Now, getting into the companies that I added to this watch list, first and foremost, you can see it at the top of the screen, Apple. And that's the reason I removed Microsoft. I decided, guys, I'm an Apple customer through and through, diehard. I got my MacBook right here. I've got my iPhone right here. I'm holding my iPad. I've got my iMac, my desktop over there. The only thing I don't have really that's from Apple is I don't have the Apple Watch. Having said that, and also knowing how strong of a company it is, I think they have a lot of growth ahead of them. Obviously, they're known for having a really solid balance sheet, so it's just a great company to invest in. So is Microsoft. There's probably room to add both, right? But if I really had to choose one at this point, I probably would want to add Apple. And so we'll see what happens. Right now, it's sitting at $148 per share. I'd love to see it get down to $120 or below, which could very well happen if we see more volatility on the market, a little bit more compression. So I'm holding out for that. The other company that I added to this watch list was Bank of America. Like with Apple, I'm a Bank of America customer, and it's obviously one of the more reputable, bigger, better banks that you can invest in out there. And then I added 2 more companies, SPG Simon Property Group right here, which is a real estate investment trust that has, I guess you'd call them higher end upscale malls all throughout the country. And I've never been to an SPG property that I didn't like. I think they're all great. And so, I would consider adding this to my portfolio at some point. Definitely not my first priority. And last but not least, guys, I added Target to my watch list. I mean, Target had a really interesting month. If we go over here, looking at this share price in the last 30 days, you guys can see a big drop right here. There was one day, and I'm sure you already know this if you keep your ear to the ground and all this stuff, they dropped 25+% in one day. Okay, huge drop. One day they were at like $215 per share. The next day they were at like they got into the 150s, like the low 150s. So huge drop in Target. I want to see if that continues to come down, because if they get to like $120 per share or so, they'll be at a 3% dividend yield. And Target is, I should have shown you, but Target's a dividend king, I think, with 52 years of consecutive dividend growth. So a lot to like about Target. And, just like with Apple, just like with Bank of America, huge Target customer, okay? And now with that said, you can probably see the trend with all of these new watch list additions, right? Apple, I'm a customer, Bank of America customer, Target customer. And now moving on, guys, what's next? What's the move for June? What are the future plans for this portfolio? Well, it depends on what happens in the market. Like I said, if there's some more compression, if we see stock prices continuing to come down, I wouldn't mind adding a couple new positions, even though I just added one with Lowe's. If there's an opportunity to pick up some of these watch list stocks like Apple, like Bank of America, like Target, I won't hesitate to pull the trigger. Now, if nothing happens and things kind of stay the way they have been, steady up and downs, but overall more ups, I'll just continue to look for the discounts within my own portfolio. That's going to be these companies like Starbucks, like Intel, like I don't know that I'd add to XYLD, but 3M, Verizon, all these companies that are down in my portfolio, I'll continue to add to those and lower my average cost per share while I'm waiting for these other companies, the Apples, the Bank of Americas, the Targets to come down in share price. So there's options here. And having said all that, if you want to see more inside my portfolio and see all of the dividend payments I received this last month, then click on this video right over here. In May, I hit a brand new dividend income record. It was my best month yet. And in this video, I'm showing you what each of those payments are, where they came from, a few of which were from some really high yielding dividend stocks. So check out this video right here, and I'll see you guys in the next one.